Hey, John Crestani, and we're going to talk about how to raise venture capital. And I've raised hundreds of thousands of dollars for my latest company from venture capital investment companies. And I'm going to talk to you about what is venture capital, why would you want to be given hundreds of thousands, if not millions of dollars to start a company, and how exactly do you go about getting folks to give you money for an idea or for whatever you want to sell. But let's start off with what venture capital is first. Venture capital is a way for people and high net worth individuals and companies to invest in other companies that show high potential to either make a lot of money or maybe some sort of strategic purpose for their larger business. Now, major companies such as Procter & Gamble, Unilever, Kellogg's, ABC, NBC, Disney, Warner Brothers, Google, they all have little investment funds to invest in new companies that might have strategic purposes. And then there's high net worth individuals that want to invest in companies to get a big return on their investment that they couldn't normally get in the stock market. Now, the typical investment company works like this. There's GPs, there's LPs, and there's a fund. And the GPs are considered general partners. The typical venture fund is $10 million and invests over a 10-year period in which they do the bulk of their investment, maybe about half, in the first 3 to 4 years. Now, the LPs are people who actually give money into the investment fund itself. So there's a bit of a convolution here, but what these are is they're vehicles that work, and they've been working for over 50 years now. Venture capital has been around and investing and fueling the next generation of companies. Now, the reasons why you would raise venture capital and why I raised venture capital for my company was because you want to build a very high growth company. If you want to build a company that just zooms to the moon and grows really fast, you should take investor money. Money is just a lever. It's an important lever that allows you to grow faster. Companies that have more money have a higher chance of success. Okay, it's one of the reasons why the people who are the best at getting folks to invest in them, such as Adam Neumann or Travis Kalanick or Elon Musk, have the highest success rates. Elon can raise $1 billion for any idea that comes to mind. And with $1 billion to fuel a company, it's very difficult to mess up that badly. The other reason why you would raise money from venture capitalists is because you're a team player and you want to work with rich, smart people. I found it be very lonely to do the entrepreneurship journey completely solo. I've been building businesses for the last 12 years, and I've earned over $20 million through my businesses, and it's a lonely journey. I've been the sole owner of all of my businesses. Being able to have really highly successful, rich people and companies at my back with a vested interest in my own success is a huge benefit that makes entrepreneurship feel a little bit less lonely. And the third reason is quite obvious. You're building a business that has high startup costs. Maybe you're building a space company. Well, you can't bootstrap a space company. You need to get a lot of money to invest in building a rocket ship. But the same also goes for some software companies. Like, I'm building a big data company right now to help really anyone, any marketer, go out and market their products or services better. It's called AdvancePay, and that's the company I've raised money for. But in order to build a database of all of the creators online and all of the direct-to-consumer brands online, it costs money to get that sort of data. I'm talking tens of millions of pieces of individual rows of data where I need to get 20 pieces of data on each of these creators or each of these brands. Costs a lot of money, a lot of time and effort, a lot of developers, so I needed to raise money to build my company. So let's get into exactly how to raise money for your company. I've done this and I'm gonna break it down piece by piece. I'll also be offering you some very special resources to help you out in the terms of investor lists and CRMs and other stuff that's gonna help your journey quite dramatically. The first thing to know when raising venture capital is you need to do a lot of research on who are going to be your target investors, okay? Who is going to be most likely to invest in your company? Now, if you are building a space company or a space startup, what you want to look for is investors who have invested in space. And the place that I like to go to find investors in companies is called Crunchbase, crunchbase.com. And what I'll do is I'll look up companies, space companies who received lots of money in investment, and I'll simply take down their information for the people who have already invested in space companies. Again, very similar to marketing is we're trying to just do what works. And if we know folks already invest in companies in this area, we want to at least put them on our list and reach out to them and talk to them. Just in marketing, what we do is we find people who have already bought products in our niche before, and we offer them another product that's very similar. It works like magic. Now, in the links in the description, I will be sharing what I call an investor CRM, which means it's like relationship management. It's a spreadsheet, which you'll be able to take down information on all of these folks that you come across that might be interested in investing in your company if this is something you want to do. And if you are looking to raise money for your company, type in, "I'm trying to raise money," in the comments in the comments so I can just kind of get a read on this. Now, the second step is optional, and it's not going to apply to everybody, but once you've created your list of, you want about 100 to 200 folks in your investor CRM. That's 100 to 200 folks who have previously invested in a company that's in your space. You want to actually look through LinkedIn and look at shared connections and see if there is any shared connections between you and any of these 200 people. And then reach out to the person who you already have a relationship with and ask them for an introduction. Now, I'll also be including a template that you can use to ask people you know for an introduction to a company. This is very effective. I've used it vigorously over the course of the last year in order to get introductions to many investors that I wanted to speak with. And the general rule of thumb is don't just straight up ask for an introduction. Talk to the person first. Tell them about your company. Tell them about how your life story led up to the creation of this company and how the progress and the traction you've gotten in building this concept, idea, or company so far, and then ask for an introduction. Again, don't just ask for an introduction, explain what you're asking for an introduction about before you simply ask. This probably doesn't apply to most of you. Most of you will probably have no one in common with the 100 to 200 folks that you were looking to raise money from, which is where outreach comes in, okay? Now, what outreach is simply making contact with these 100 to 200 folks that maybe you have their LinkedIn profile, maybe you were able to scrape their email address, maybe you have their phone number, maybe you just have their Twitter profile and you're going to send them a DM. Whatever way you are going to reach out to them, you need to make contact somehow. Now, the methods I've used are as described. I generally email folks, or I'll send them a LinkedIn message, or I will send them a Twitter DM. But whatever way you do outreach, you want to reach out, and my general rule of thumb is 25 folks a day. 25 people a day to reach out to and make contact with. And I've included a template in the links in the description that goes over just a typical outreach email. You want to be very straightforward in what you're asking for, and you want to clearly describe what kind of market or what your company does. The next step you're going to do to raise venture capital is get a meeting. Now, the goal of everything so far is getting that meeting, is meeting with that investor and explaining to them your story, why you are a winner, and explaining to them why your company is onto something major and perhaps the next unicorn. But before you get to the meeting, there's a couple things to understand about these two different ways, these two different paths you could meet with investors. Investors and high net worth individuals, venture capitalists, are a very closed circle of people. They're rich, they have money, and they're looking to deploy that money. So correspondingly, they have a lot of folks that are like vultures trying to get that money for themselves, for their own idea, for their own company. So you need to keep that in mind and be considerate of their time. Now, investors, venture capitalists, what I've seen is, generally speaking, when I ask for an introduction, I get about 75% of the time, the person I ask for an introduction will give me the introduction. And, usually I have a person, when I speak to a friend, they'll give me the introduction. And then from that, 50% of these folks end up booking a meeting with me, which means that when I speak to somebody who knows an investor, about a third of the time something like that. About a third of the time, I will get an actual meeting. This has a pretty good batting rate if you know people. Now with cold outreach, which is what I call 25 a day, I see about a 4% response rate, which means one person a day will actually respond to my emails or LinkedIn DMs. And of that, again, we see a 50% meeting rate where they say, yes, I am interested, and actually book a meeting, versus 50% who say, either flake on a meeting or just simply don't book it. This next step is completely optional as well, but now that you've met with an investor, you've met with investors, the last step in my mind, or the second to last step, is getting an in-person meeting and meeting in real life. I found that when you're working with folks, when you're asking folks to give you hundreds of thousands of dollars for an idea or for a company that is not necessarily making hundreds of thousands of dollars, having an in-person meeting to really forge that personal bond and also show, look, I'm willing to fly places for you, or I'm willing to meet with you, or I'm willing to, I'm present, I'm a human being. It forges a much stronger connection. And I found much more solid amount of money that's invested in my company from actually doing in-person meetings. Everybody who's invested in my company, I've met with in real life, even if they are not located in Malibu or in Los Angeles. I've met with them in real life at their offices or near their offices or near where they live to forge that connection. And finally, the final step is closing the deal, okay? Once you find an interested venture capitalist, they will do they will give you what's called a term sheet, which means they will give you some sort of legal document that will say, we will be investing $1 million into your company. We are valuing your company at $6 million, yada, 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 and all this other legal stuff. But it's called a term sheet. And that's the goal of working with venture capitalists, is to get a term sheet, is to work with high net worth, high performance, highly intelligent investors that have got your back and are incentivized to help you sell your company down the line or create a major exit event for whatever you're doing. I hope this video has been useful, and I'd love to hear, what is your interest in venture capital? Are you a venture capitalist? Are you an investor? Are you somebody who's looking to raise money? And let me know what other questions you have in the comments below. Now, my name is John Crestani, and on this channel, I talk a lot about marketing, I talk about entrepreneurship, and I just generally talk about life. This channel has transformed from my own success from having started and sold a marketing agency many years ago. I grew a marketing agency to $5 million a year in revenue, and I sold it and I made a lot of money. And now I'm looking to build a venture scale, high growth company. But I'd love to hear your questions and comments and love to help you out. Post below, subscribe, like the video, and talk to you soon. Bye.